Okay, so I started the recording. Yeah, so on the currencies window, then in the version after Dynamics NAV 2016, then you have exchange rate service you can configure, and by using the exchange rate service, you can there's a scheduled job, and that scheduled job can automatically update your exchange rate based on the interval you scheduled. So that's this one I have here. I have the exchange service configured. So there are two exchange rate services you can use. So one is the Bank of Canada. So because we are located in Canada and we are UltraPoint Canada, we are located in Canada. So we use this Bank of Canada, but this service is not very reliable. Sometimes it's broken. So I think everybody in North America, they're using this float rate. So there's a configuration package you can download for this float rate service. After you download that, you just use the configuration package, import all the tables you need. Then you will have this. If you open this float rate, then you see all the configuration will be there after you import the configuration package. So basically, this is using the data exchange definition to map from the bank feed service to map the data from their XML file to the format that NAV can recognize. And then after you import this float rate, you have this service, then you have to enable this service. At the same time, when you enable this service, then there's a job queue entry created. So the purpose for this job queue entry is for your schedule. You want to schedule this exchange rate service to update your exchange rate. Like if you want to do it, want the rate to be updated every day, then you can check all these like Monday, Tuesday until Sunday, right? And you can configure like a starting time you want the rate to be updated. And after you enable that, and this job queue entry will be ready. You can see right now the status is ready. So then it will run based on your schedule here. But you have to configure the schedule, okay? So after that, then you could see, after I configure that exchange rate, I can also take a preview of how it looks like. Then when you preview, then you can see the exchange rate and the relational exchange rate in the preview window. So let me see where it opens to. So it may take some time to open it. Okay, so it just opened. So you can take a preview, then you can see all the currencies in your system and the exchange rate amount, relational exchange rate amount, adjustment exchange rate amount, and the relational adjustment exchange rate amount. So this exchange rate amount and the relational exchange rate amount is used on your master data, like the customer so it's used, so on the master data, on the customer card, Wonder card, bank account card, you set up the currency code. Then when you create documents, like when you create a purchase document or when you create a sales document, on the purchase header or sales header, it will, based on the posting date of that document, it will look at this currency exchange rate table to find the exchange rate from here, to find exchange rate and the relational exchange rate here for the currency conversion factor for that document. And when you post that document, it will use that exchange rate as the exchange rate. So basically the exchange rate application, there are 3 stages. So the first stage is when you post the documents or journal. It's going to use the posting date of that document or journal and check this exchange rate table to find that date. So based on the starting date and that currency code to find that date, and then to find the exchange rate match that posting date. And that will be used for the exchange rate to convert between your local currency and the functional currency. And then for that document or journal. That's the first stage. So the second stage is like at the month end, you have to run an exchange rate adjustment. So which comes to this. So it's also on this currencies window. Then you have this adjust exchange rate. If you click on this, then you will see this is the batch job, which will go through all your open. So you need to make sure when you run this batch job, you need to have this adjust customer, vendor, and bank account, you need to have this checkbox checked. Because once you get this checked, which means it will go through all your open customer ledger entries and open vendor ledger entries, open bank ledger entries to find out those exchange rate which has a difference with another exchange rate, with the adjustment exchange rate. So when you look at this exchange rate table, you can see we have this exchange rate and the relational exchange rate. But when it does adjustment, it's looking for this adjustment exchange rate amount and the relational adjustment exchange rate amount to do that month-end revaluation. Okay, so it's looking at different, but by default, if you are using those exchange rate service, by default, it just copy whatever you have for the exchange rate and the relational exchange rate to the adjustment exchange rate and the relational adjustment exchange rate. It just copied those values by default. But actually, if you want to have a different adjustment exchange rate, you can manually set up there. So that's your choice. Yeah. So when you use this batch job at month end to do the revaluation, it's using that adjustment exchange rate to revalue all the open customer ledger entries, vendor ledger entries, and bank ledger entries. Usually, when you run this job, you leave the starting date blank. You don't put in the starting date, just to make sure if there's any adjustment, exchange rate adjustment you missed previously, then it can be captured. And then we usually only, the best practice is leave the starting date blank and only put in the ending date. So this ending date usually is the month end, the last day of the month when you do the month end. And then you just leave this posting description as the default. It just tell you like adjustment of what day, what year, and for the exchange rate adjustment. And this posting date is used for after you post this adjustment, there will be an exchange rate. There will be a general ledger entries credit. There will be entry credit for this exchange rate adjustment. Then you could see those exchange rate adjustment register. You could see them in the exchange rate adjustment register. So yeah, so that's for that. And let's go back to this adjustment exchange rate. So this posting date is for that posting date. When you see it in the register, it's going to use this posting date. And this is a document number which may remind you what adjustment you are doing. So if you are doing adjustment for July, you can say exchange rate adjustment July, right? So just make it something make sense to you. You don't need to use like a number. You can just rename it to something which makes sense to you. And then this, you still have another checkbox here, says adjust GL accounts for additional reporting currency. So this is not related until you set up in your, there's a setup in your general ledger setup. So let's go to your general ledger setup. Okay, so in your general ledger setup, you have under the application reporting. So under the reporting, you have here, under the reporting first tab, you have an additional reporting currency. So for some of the implementations, like people do not set up the additional reporting currency. This is just for you, like you can have your, because in NAV, everything is in local currency. But if you want your reporting at the GL level, to see, you want at the chart of account GL level, you want to have another reporting currency, then you have to set up this. So after you set up this, then if you go to your chart of account, in your chart of account, then you can see there's additional, except for this. So there's if the field is not available, then you can choose columns to make this field available. So you could see this additional currency balance, additional currency net change. These are for the reporting currency you are using, and also this. So these three fields are for the additional reporting currency. So let's say we are in Canada. Our local currency is Canadian dollars, but we can set up the additional reporting currency in US dollars. Then if you set it up, then you run that job, adjust exchange rate job. Then with that checkbox checked, then you will see you will have this. You will have these numbers which converted from your local currency, because for your local currency you have the net change balance, balance at date. These three columns are all in the local currency. But if you want to convert it to the US dollars, then you set up that additional reporting currency, then you will see those converted numbers here, okay? And then that's for your reporting purpose at the GL level. So if we go back to this job, and this checkbox is only related when you set up that additional reporting currency in the general ledger setup. If you don't do that, then you don't need to check this checkbox because it's not related. And also, if you set up that additional reporting currency, then there's another thing related is also in your chart of accounts. Under each GL account, let's take this GL account as example. So under each GL account, so you have this under the reporting fast tab, you have this exchange rate adjustment. This field is not related if you do not set up that additional reporting currency. So you do not need to set up anything here, just leave it as a default value, say no adjustment, if you do not set up that additional reporting currency in the general ledger setup. You only need to set up this if you set up the additional reporting currency and you want to report and you want the exchange rate adjustment to adjust by the local currency amount or the additional currency amount. So you can select these two options, okay? But you know, if the exchange rate is always fixed, so in some European countries, like there's like a euro and their local currency, if the rate is fixed, and also you can say no adjustment because there's really it's fixed, there's no adjustment. But there's and if it's a floating, then you may select, if you set up that additional reporting currency, then you have to select one of these. Either you want to adjust the local currency amount or the additional reporting currency amount for this. So this is only related when you set up that additional reporting currency. So that's about the job. So if we go back to this currencies table, then go back to here. So if you set up that additional reporting currency, and also you set up the under each GL account, you set up that exchange rate adjustment, like adjust according to additional reporting currency or the local currency, then this checkbox is related. When you do this, it will adjust at the GL level, it will make those adjustments. So these are the functions here, but usually if you don't set up that, this is only what you have. And another thing regarding set up the currencies table is like for each foreign currencies, you have to set up, when you set up the exchange rate, you also have to set up those accounts, like the unrealized gain or loss, or realized gain or loss. You have to set up all these accounts. And you also have this realized gain, unrealized gain. So you have this, right? And also you have the residual gains and residual losses account. So these two accounts is only related, these two GL accounts is only related when you set up the additional reporting currency, because like you will put those, compare with your local currency, the adjustment will be posted to this residual gains or loss account. And when you close the year, it will go to your retained earning account. Yeah. So these are the setup for your currencies. And also when we talk about, you have the so this is the process, like we said, it's three stages. The first stage is like when you post the documents or journals, it's using the exchange rate on that posting date. And then when you do the month-end process for this adjustment, exchange rate adjustment, then the batch job goes through all the open customer, vendor, bank ledger entries and do the adjustment. It will post those. So if there's any differences, it will post those differences to that to an unrealized gain or loss GL account, and the other side will be post to your AR or AP account. Yeah, so that's at the month's end. And then say after you close the month and next month, if you apply the payment to the invoices, that's the third stage. So when you apply the payment to the invoices, then it will reverse what you posted to those unrealized gain or loss account, and then it will post them to the realized gain or loss account, and based on the posting date of the payment. Okay, so that's the 3 stages of the posting. And so we talk about, so there are 3 entities, like you have the customer, you have the vendor, and you have bank account. On those 3 master data, then you have the currency code. So if we take a look, I think you guys are familiar with this. So just pick up a customer. Okay, may take some time to load. Okay, so let's just pick up a customer like this 10,000, and so on the customer card you have that field like currency code. Okay, so if you go to the foreign trade, so the foreign trade, just give me a second. Okay, so you see here is I think under your version is still under the foreign trade, but this version is under the invoicing. First tab, you have this currency code. So that's on the customer. On the vendor card is also the same. So if we go to the vendor card and we can take a look on the vendor card, then you have that currency code. And also the same on the bank account card. So let's take this vendor. Okay, so also on the vendor card is under the invoicing fast tab, you have this currency code under the foreign trade, under the invoicing fast tab. And also on your bank account, so if you go to, this row is the sales order process row, so I don't have that in my navigation for the bank accounts, just search it. So on the bank account card, you also have that currency code. Okay, so on the bank account, now you can see the currency code here. Okay, so those 3 master data. And when you create a document, like when you create a sales document with that customer, then that currency code from the customer card will be carried over to the sales header. And let's go to a sales documents and take a look. So if you go to the sales order, just click on the sales order. Okay, so any sales order here, and so on the sales header you will see that currency code. Let me scroll down. Okay, so if I scroll down to my invoicing details, and this one is here, see here. So on the sales header you see this currency code, and you have this 3 dots. Okay, so because this currency code is blank, blank means the local currency. For local currency, we do not define the local currency in that currencies table. Local currency, the currency code for the local currency is always blank. So which means for me, because this is Kronos Canada, the Canada demo company, is the Canadian dollars. So that's found because this is that's found the currency code which is not Canadian dollars by filtering this sales header. Okay, so let's say it's US dollars. Oh, I don't have anything here for this. Okay, so let's just quickly quickly create one. So if you have a customer with the US dollars, then you just bring that customer over. So we can filter this customer list. Okay, so if I go to my currency code and I say USD, I should have some customer there. Okay, great. So if say this customer, because it's US dollars, when you create a sales document, and then that US dollar currency code will be carried over to the sales header. Okay, and then based on the exchange rate on that date, then you could see I have the currency code here. Then if I click on the 3 dot here for the assist edit, then I can see the exchange rate for this document at a time. So this exchange rate is like based on the posting date, it's looking for that currencies table to find the exchange rate matching that posting date on the sales header. So then it found this this exchange rate. So then here, if you want to apply another exchange rate on this sales document, you can override this number. So you can change it like change it to another exchange rate if this exchange rate should be different, like you want to do it specifically for this document, you can override what you found from that exchange rate table. So you can do this. And for the vendor side, it's the same thing. So then let's quickly create let's quickly finish the invoicing for this document, then to see, then we make a payment for this. Okay. So I just put it at a blue and quantity 1. Then just finish this document. Okay. I'm gonna post this, ship and invoice. But because this demo system is using a future date, it's right now the date here is October 13th, 2021. It's not our current date. Okay, so this is for the Lanham. Don't need to worry about this. I have an item for Lanham. It's asking for the packing station. Yeah, so it just posted that. So that posted sales invoice, then it's using that exchange rate. So if we go to find that posted sales invoice, let's sort by the last one. So this is the one, that US dollars one, right? So this is the posted sales invoice number. And let's say when you receive so this is for the account receivable. That when you receive the customer payment, then you can create a cash receipt journal, or you can create a cash receipt journal, or you can create a deposit. So we can create a cash receipt journal for this customer, and so that customer. Then so for the cash receipt journal you create, it depends there. So this application for the payments, then there's some setup you have to pay attention to. So in your sales and receivable setup, in your sales and receivable setup, you have this application between currencies. Okay, so you can I'm not sure you guys set up there. So if you allow, so this EMU is for European countries, but you have this all. It means for all the currencies, you can have different the payment in different currency applied to a regional invoice in the local currency. So this is like if you want the payment and the invoice to have different currencies when you do the application, when you apply the payment to the invoice. So the best practice is like this will make your data messy, I think. So usually we just select none. We want the payment to be in the original currency. We don't want to application between different currencies, because you have more analysis you need to do if you select all. But I'm just gonna show you, if you select all here, then what's gonna happen. Okay, so which means you can so for that posted sales invoice, the transactional currency is in USD dollars. And then if the customer made a payment, but it's in Canadian dollars, then you can see when you made the application, then you can see how the detailed customer ledger entries look like. Okay, so that's what I want to show you. So I'm gonna edit this cash receipt journal, and then I just use the default document number there. And the account type, I'm going to select the customer, and the customer, I think this is the one, and has no, okay. So you see, after I select this customer right away on the line, it's just a carry over what is on the customer card to this cash receipt journal line. Okay, and then you can select which document you want to apply to. So I'm gonna click on here, applies to document number. Oh, so I don't have anything here. That's odd. So I have that posted sales invoice there. Let me double check that posted sales invoice I just did to see if it's a different one. So this is the sales invoice, and the customer number is this customer. Oh, because this customer has a bill to customer. So this make it more complicated. So it depends on the bill to customers. So I'm gonna take a look here. So in NAV, you have sell to customer, and you also have the bill to customer. So the bill to customer is where the invoice goes. The sell to customer is where your product goes. So the reason I have there, when I create that cash receipt journal, it tells me this customer has a bill to customer. So it's trying to use this bill to customer to apply the payment, which means the payment should come from the bill to, not the sell to. So then in this case, then you have to take a look, what is the currency code on this bill to customer if you have this bill to. So this is a more complicated case. Then on this customer, and you can see, oh, the currency code is still US dollars. Okay, it's still US dollars. Then let's check the ledger entries for this customer, because we created sales invoice, and we should have that sales invoice. I think this is the one. This is the one we just created. So this sales invoice number 103057 is the one we just created today. So then when I create that cash receipt journal, it's asking me, do you want to use that bill to big customer? Because when you create the cash receipt journal, the invoice is sent to the bill to customer, and it's thinking you should have the, let's just re-enter this customer number. So I think, so what you select when I populate, the customer has a bill to customer number. Do you still want to use this in this journal? So then you will say no, because that customer ledger entry is not generated under this customer. The customer ledger entries will be only generated under the bill to customer, not the sell to customer. So I think I click on the yes. So that's why when I try to apply the entries, then there's nothing. There's no customer ledger entries. So actually, when I enter this customer number, I should enter 014545 instead of this 011212. Okay, so 0151. Oh, what is that customer number? The 145 is this one, 014545. This is the bill to customer, and this should be the customer who make the payment, because you send the invoice to this customer. And then now you go to the applies to document number. So you see this invoice here. This is the invoice we just created today.
Yeah. Hey, Jesse.
Yeah.
Hey, this is Lori.
Yeah.
Hey, I just wanted to pause for a minute, if you don't mind,
sure.
and just ask the group
to
make sure that we're getting, this is getting into a lot of detail that at least a couple of the Lindsay operations folks don't get into this level of detail.
Okay.
So I just want to make sure, pause. John and Ron, is this helpful for you? Because I do think, at some point as we do more international transactions and things like that, this may be helpful. For immediate use, we don't go to this level of detail in what Allie, Brett, and I do today. So in part, maybe this is something that's helpful for you. I just want to stop and pause and say, do we want to pause and maybe get to some specific questions that the Lindsay team has, or do we want to keep going at this level of detail? So I'll just pause and let others weigh in.
Yeah, Lori, I think it's been helpful. This is John here. I do think it's been extremely helpful because there's a number of different setup areas, and I've been keeping note of that. I know she mentioned bringing in the configuration package, and I might have to ask her again about that, but configuration package would be on my end. Some of the granularity in here, I'm glad she's covering. Again, I don't know what detail you guys are going into, but I'll at least try and make note just in case we come across a situation where bill to and ship to customer and all that stuff. So.
Okay, that's fair, and we can certainly keep going through. I just wanted to stop and pause.
Okay, that's good. I also do not want to lose you guys. if you want, like, if you have specific questions you want to ask, just stop me anytime. So yeah, so then I want to make this session helpful to you guys. I don't want to just me talking. And if you have any questions you want to address in this meeting, then just let me know.
Okay, and Jackie, I think if we can keep going at that level, but I just want to make sure we do have some time at some point in the session for us to pause and ask some specific questions as well.
Okay, sure. Okay, sure. So yeah, I'm just gonna quickly apply this transaction, and so then I select that transaction of the. So this is a payment. The customer made a payment. I applied it to the invoice. So right now, because this customer transactional currency is US dollars, so when I made a payment, when I apply, it just automatically think it's applying in the US dollars as well. But let's say so, but you can change the currency code on the line, right? So if the customer, when they made a payment that they made in other currencies, on the cash receipt journal, you can still like change to the other currencies. Let's say I blank out the US dollars, and then it will be the payment will for that amount will become the local currency, will become Canadian dollars, and then the amount will be if I apply to that original invoice, then I will, for that amount, it will be short. So you see there's a balance here, because originally I have that in US dollars, but I removed that US dollars from the payment line, from the cash receipt journal line. So it becomes Canadian dollars. Then if it's a Canadian dollars for this $2,793.81, then it will be short. So on the lines, you have two fields. One is the amount $sign. So amount $sign is the in local currency. And also you have the amount. So this amount is in the transactional currency. But because this payment, right, I removed the US dollar, it becomes Canadian dollars now. So this amount is in Canadian dollars now, okay? But from what it tells me here, what I need to make, so actually I need to, this is applied amount becomes what you have to enter for that Canadian dollars in order for you to fulfill like to exchange between that Canadian dollars to this and have a balance of 0 here. Because right now I have a balance after I remove that currency. So in order for me to fully apply to this US dollar invoice, I need to, this is based on the exchange rate. This applied amount is based on exchange rate. So I need to use this amount of money, $3,745.71, 374571. So 374571. So I need to, oh, no, what did I put there? Okay, that would be fine. So because it's the same now. So now I have to enter that amount. Yeah, what? I think I entered the wrong amount here. Oh, I entered 3. Yeah, I entered too many zeros. 374571. 374571. That's the same. Okay. What? 3745. I'm just going to delete this. Re-enter this. 374571. Okay. Oh. .71. Okay, yeah. So this is the amount you have to enter in order for it to be balanced. And now you go to your applied entries. I think I entered the different sign. I removed that minus sign. That's why it becomes. When I re-entered, I removed that minus. Okay. So this now it balanced to 0. Okay, so if you are applying when the original transaction is in US dollars, when you apply it, you change to another currency, then this amount, if you want to adjust to the balance 0, you have to adjust this amount based on the exchange rate, and then you can post this cash receipt journal after you applied it. Okay, here's auto balance. So I only entered one side, the other side I didn't enter. So the other side is the bank. So that's another thing. So this is the bank. So for the bank, you have different, remember on the bank account card, you also have different currency code, right? So you have the currency code on the customer card, vendor card, and the bank account card. So for this cash receipt journal to balance, the one side is customer, the other side is your bank account. So you have multiple bank account here, based on like, so this is another thing. So you can, the original transaction is in US dollars. And when you make the payment, if you allow them to pay in a different currency, and then your bank account, you also does not limit the bank account. So the bank account also may be in different currency. Then the situation will be more complicated. So let's say in this case, I will select a Canadian dollars bank account to make the situation to be simple, because I made a payment in Canadian dollars, and this bank account, you see the currency code is blank, which means it's in Canadian dollars. So then I'm going to select that bank account, so I can just post this. Okay. So because you guys wondering the best practice, so let's say the best practice is like if you in the sales and receivable setup, you select that application between currencies, you select all instead of none. Then when you make a payment, then you can use another currency. Then it will have confusion when you apply the payment to the invoice. And also when you made a payment, if the bank you select is in another currency as well, let's say the bank you select is a currency other than the transactional currency and the currency of the payment, then the situation will be more complicated as well. So there's a lot of adjustment and the revaluation going on when you do the month end. So that's why when you revalue the open customer ledger, open vendor ledger, open bank ledger for this transaction, if we select another bank, then a bank with a different currency other than the transactional currency and the payment currency, then when you revalue the customer ledger entries, the bank ledger entries will all be adjusted. So it will be more complicated. So the best practice is like we usually on the sales and receivable setup, we just put the application between currencies to be none. So whatever the original transaction currency is, when you make the payment, you have to be in the original transactional currency. And for the bank is totally depends on your account receivable person. When she apply that cash, when she does the cash receipt journal, so she should make sure like the bank is it's identical with the currency the customer made the payment, right? So then everything will be easier. You don't have too many reconciliation you need to do. Okay, so that's about the different currencies when you make the application, those kind of things. And we can go to the customer ledger entries to take a look. Okay, so I'm demonstrating just at the sales side, but for the purchasing side it's the same thing. And okay, so we can sort by this date. You could see this payment. So this is the payment we just made through that cash receipt journal, and this is the invoice. And you could see right now the remaining amount all becomes zero. So they applied to each other. The payment applied to that invoice. If you go to the applied entries, so if you go to applied entries in the here, navigate, then you could see that payment applied to this invoice. And but this is the original amount in this US dollar currency, and it's closed by that payment entry. So you can go to either entries, check the applied entries, that invoice applied to that payment, and that payment applied to this invoice. Okay. And so on the lines, you also have the amount. You have the amount $, which means this is the local currency, and you have the amount which doesn't have anything, which means the transactional currency. So in NAV, the customer ledger entries, bank ledger entries, and the vendor ledger entries, they all use the transactional currency. But like the item ledger entries, value entries, and the general ledger entries, currency factors, they all use the local currency. So you have to remember this. Sometimes you may be confused how these numbers are expressed, if it's in local currency or if it's in foreign currency, transactional currency. So the customer ledger entries, vendor ledger entries, and bank ledger entries, they are expressed in the transactional currency, okay, which means this amount expressed in transactional currency. But you do have this one, which is the local currency. And the item ledger entries, value entries, and general ledger entries, they're expressed in local currency. Okay. So if you drill down, if we go to this dollar sign, this is the local currency. If you drill down, if you have done any revaluation, or if you have done any, so at the month end, if you did a revaluation, and then you will see another entry. If there's any differences, like the original currency exchange rate and the month end exchange rate, if there's any differences, you will have another entry generated here, and it will say the unrealized gain or unrealized loss. So this is the detailed customer ledger entries. So this is the one when I talk about the second stage of the currency exchange rate. When you do the month end, when you run that adjust exchange rate batch job and check that check mark to adjust the open customer ledger entry, vendor ledger entry, bank ledger entry, it will generate. So one side at the GL level, it will generate the unrealized gain or loss. It will generate that amount and put into the unrealized gain or loss GL account. And the other side, it will post to the AP or AR. But it will you will have additional detailed customer ledger entry or additional detailed vendor ledger entries generated. That additional detailed customer ledger entry or vendor ledger entry it will tell you like a document. It will say unrealized gain or loss and give you the amount. You will see in the detailed customer ledger entries. And you have to drill down from this dollar sign, which is the local currency, to see it, to see that entry. So that's the second stage. And so I'm only talking about the customer side, but the vendor side is the same. So you have that in the purchase and the payable setup. In the purchase and payable setup, you have that application between currencies. Okay, you have this as well. Then you have to make sure, like, if you, like for me, for the best practice, I will select none. I will like the payment to be in the original currency. Okay, then so anything else like the currency application, when you make the vendor payment, is the same like the example I just did for the cash receipt journal for the AR side. It's the same. Okay, so do you guys have any questions about this? Because yeah, I think that's basically how the currency is applied. If you have like you can do a consolidation. So like I have in this demo company, in this demo database, I have 3 Kronos demo company: Kronos Canada, Kronos Mexico, Kronos USA, and I have a consolidated company. This consolidated company is like you have to run through a consolidation process. So if I go to this consolidated company, but the consolidation only happens at the GL level. It's not consolidating your subledgers. It's only consolidated at the GL level. So in Business Central, you have the assisted setup, and there's a wizard you can run. You can go through to consolidate all those companies. And that wizard could set up consolidated reporting. It's this wizard. I already completed this. But when you run this wizard to consolidate all those multiple companies at the GL level, then you could say, but right now, because I created when you create this consolidation company, so first you have to create a company which is empty, which means it doesn't have any data, doesn't have any transactional data or master data. It only have a GL account. But for you, So Laurie, will this help with you guys? Do you want me to continue with the consolidation? Hi, Laurie. Hi, Laurie.
Yeah, sorry, I had to get you off mute. I would say we do not use the consolidation company. We used to use it historically. We have another consolidation tool. So unless anyone else wants to listen to this, I'm not sure we need to use this.
Okay, so then, so if you don't need a consolidation, I think for the multi-currency, I pretty much covered everything. Do you guys have any questions for what we went through? Like anything specific you want to ask?
Yeah, this is Barb Schaefer, and I do have a question, and I apologize. I had to step away for a couple minutes, so if you covered this, I apologize to ask you again. But
yeah,
if I make a purchase order, I'm a U.S. dollar company.
Yeah.
So I make a purchase order in euro.
Yeah.
And I date the purchase order July 1st. And the receipt comes in July 25th.
Yeah.
So what is going to be my euro dollar for that expense when the receipt comes in? Is it going to be, how's it going to translate? Is it going to translate at the July 1st date when I issue the purchase order, or at the July 25th date when I receive the purchase order? What's my US dollar conversion going to be?
Yeah, so the conversion will be on the posting date of the invoice. So it's not the currency exchange rate when you place the purchase order. It's not when you receive the order, because when you receive the order, you have separate process, right? For the purchase order, you can post the receive and you can post invoice, and you can post receive and invoice together. So based on your practice, if you post the receive and the invoice together, then the posting date of your purchase invoice will be the same as your posting date of the purchase receipt. But what now?
But we don't. We purchase, the stuff comes into our plant out in Lindsay, Nebraska, and they receive it. Let's say they receive it on the 25th. We do not receive the invoice until, let's say, the 30th. We receive the invoice on the 30th.
Okay.
So we have a receipt on the 25th. That's when our
Okay, so what you are saying, like you do post the receive, and so I'm on the purchase order. So you have these three options, right? So what you are saying, you do post the receive first, and then you receive the invoice. After you receive the invoice, you post the invoice, right? It's two separate steps for you.
Two separate transactions, two separate people responsible.
Okay, that's good. So the exchange rate will use the posting date of the purchase invoice. It doesn't care the purchase receipt. It just care the invoice. That's your financial transactions. Okay, does that answer your question?
I have to think about it to make sure that I agree with that. But I have to give that some thought.
So the receive is only for the goods. It's only for the flow of your goods. The invoice is where where the financial transactions coming. So that's why it's using the posting date of your invoice. It's not using the posting date of the receipt.
Well, it may or may not, depending upon what the date on the invoice is. You know, the date on the invoice may be the same as the date on the receipt. It may be a couple days earlier when they shipped it. It could be a couple days later.
That's correct.
It may or may not be highly unlikely that it would be the same day as receipt.
Yeah, that's correct. Depends on if they change this, right? So right now, so that this purchase order, when I receive it, I can just keep this posting date like January the 28th, and I receive it. And then when I invoice it, I can change it to there's nothing to post on this. When I invoice it, I can change it to another date for my invoice. So I can change it to January 30th. Depends on this posting date. When you post the invoice, it will use the posting date of that invoice to calculate the exchange rate. So that's really the practice between you guys. If you do change this posting date to the current date when you invoice it, or you just keep the original date there. If you still keep the original date of the receipt date for the posting date, then it will be the same. Your invoice date, posting date, and the posting date of the receipt will be still the same.
But what about does it post to the general ledger for the receipt? The amount on the PO at what rate? Because it's going to post for us. It's going to post something on that receipt. When I receive it, I post an expense and I post a liability.
That's correct, but it's just depends on. So let's say in the purchase and no, even in your inventory setup, setup. Okay, so your inventory setup, you depends on these settings. You have the automatic cost posting, automatic cost posting, expected cost posting to GL. Depends on this setup. If you have this setup, and then when you receive it but not invoice it, it will post it to accrual account and interim account for the inventory and the accrual account, inventory accrual in interim account. So to GL, but when you really invoice it at the final step, that accrual account will be reversed and posted to the final.
Right, but
Yeah.
what it first post, what rate is it going to use? When it first posts to the interim account and to the liability account, what rate is it going to use to convert? Is it going to use the rate on the date of the purchase order or the date of the receipt?
It's the receipt. It only used the posting date. Yeah, that's correct. But it will be reversed and reversed to the invoice date.
Yeah. Right. When you get the invoice, it all reverses out, then it posts according to the invoice. Right.
Yeah.
Understand.
Yeah.
Okay.
Okay.
But there could be an exchange rate difference between receipt and invoice then. So your expense amount is not known until that conversion on the when the invoice is posted.
Yeah, that's right. It could be a difference, but that's why you have the expected cost and the actual cost. In the value entries, you have that expected cost and the actual cost, and the actual cost could be different from your expected cost because the exchange rate is different. There's a difference between the receiving and the invoicing, and there will be an adjustment done at that time when you post the invoice.
Okay.
Yeah.
But once the invoice comes in, my inventory valuation or my expense amount will not change, only the value of the AP or the AR.
That's correct. Yeah.
Okay.
Yeah. Okay, so any other questions regarding this?
Hi, this is Allie. So I have a few different questions. Bear with me because Business Central is fairly new to me. So I'm trying to make sure I'm understanding, I guess, where to go. So we have a company and that I do the accounting for. And so every month I'll go into our setup and enter the foreign currencies and post the entries and do the exchange rate adjustment. So sorry if this is taking a few steps back. So when I go to enter the currencies, is that like under that setup or administrative in order to enter my foreign currencies?
That's correct. So you go to Department Financial Management, Setup General, and go to this currencies.
Okay.
Yeah.
And then, so like for Brazil, so the real. So I just double click in there to enter the currency for that month.
That's correct. So what you have to do, you have to go to click on exchange rates. Okay. So when you click on the exchange rate, for the currency exchange rate, it's using the starting date. Okay. So like if some company previously before they have the exchange rate service, which can update the exchange rate every day, then they usually only update it once a month. So like because when they do the month end, then they will look at the exchange rate, then they enter the exchange rate. So let's say they enter this. So at the month end, they enter this date and they enter exchange rate here. And then starting from that day, like for next month, everything between this date and August 31st will be using that exchange rate from that starting date. We'll be using this exchange rate. That's before you have the exchange rate service. But now you don't need to maintain, after you have Business Central or after you upgraded to NAV 2016 or later, then you have this exchange rate service. It will do the update for you automatically. You don't need to manually enter anything.
Okay.
Yeah. So you could see,
Okay.
you could see at my exchange rate here, it's already up to date because I have that exchange rate service. It just updated automatically every day. I don't need to, so you see July the 23rd. I don't need to manually enter anything.
Okay, and so then when I go to post an entry,
Yeah.
Historically I would go into a certain transaction line and pull it up and then go ahead and apply the payments to the customer card.
Yeah, okay.
So can you go to like a screen like that? So just walk me through.
Okay, so there are different places in Business Central you can do the payment application if it's for AR. So you can go to the item ledger entries. Then from the item ledger entries, like if you already post a payment in the cash receipt journal, but you didn't do the application. So then you can go here, right? So for example, I have this payment. And so this is the example I did, but this payment is already applied to this invoice. You can go to applied entries to see it. But let's say if I apply this payment wrong, I shouldn't apply this payment to this invoice. I should apply this payment to another invoice. Then I can go to this customer ledger entries, and then I go to my click on unapply entries, okay? And then I just select all these. I don't want this application. Oh, you already see. There's a realized again on this. When we did when I applied the payment to the invoice, so the original transaction is US dollars, but when I applied my payment is in the I removed the US dollar, it's in Canadian dollars, so it did calculate a realized gain. So there's something calculated, but so this is like when you apply the payment to the invoice. Then it's using the posting date of the payment to calculate the exchange rate and finalize the realized gain to that GL account. Okay, and then you see this in the detailed customer ledger entries, you will have a realized gain. So let's say if I unapply this, I can, if I apply this payment wrong, I shouldn't apply it to this invoice. Then I can click on unapply entries, then highlight everything and click on unapply. Then everything is gone. So if I go to my navigate applied entries, you don't have anything applied. So then I can reapply this payment to another invoice. So let's say if this invoice number is the one I should apply to 103056, then I can click on this payment. Then I can click on apply entries. Okay. So then I can apply to another one other than the other, so I can apply to this one. So originally I applied to this one, right? So when you open this apply customer ledger entries, it only display those ones still open, those invoices still open, which means you still have a remaining amount. If you don't have any remaining amount, that customer ledger entries is closed. So it will not display on this apply customer ledger entry screen. So after I apply, I can see I still have a balance there. Okay, so I apply this amount and then I still have a balance. So I deducted this payment amount, I still have the balance on this because this is a big bill, big invoice. Okay, then you can, so before you come out, I didn't apply that. So after you applied, you have to post application. You have to post this application for it to get applied.
Okay, and so you just highlighted that one amount and then you hit that
yeah,
set apply.
Yeah, that's correct. So then
Okay.
if you go to your applied entries, then you see it has been applied to another invoice. It's not the one I did in the example. It's in another invoice now.
Okay.
So this is how you can manipulate in the customer ledger entry screen for the payment and invoice application. But you do have other ways, like what I showed you in the cash receipt journal is the regular way. You have to apply the payment in the invoice. So when you receive the customer payment, either it's payment remittance advice or it's a check, then you can go to the cash receipt journal. Then you enter the customer number, then customer number, then you enter if it depends on the amount you received, right? So let's say you received $5,000, but you don't know which invoices you have to apply. You can enter, have to put a minus sign for this. You have to put negative 5,000 here, credit 5,000 to the customer account, and the other side will be your bank account. And so you can select the bank account, and then you have to apply this. You still have to apply entries, okay? So for the apply entries, you can, so for this customer, there's nothing, but you have to select one has open customer ledger entries, because this one is not a good example. That's a sell to customer. This one maybe, okay, so let's see if any. Okay, so this one we have lots of open entries. So that's a 5,000. Then you can apply that 5,000 to multiple invoices. It's really up to you. So let's say I'm gonna remove this. Let's say, yeah, we do want to, if you do want to apply it to, let's say you want to apply to these 3 entries, then you can highlight them and apply. And this one, okay. So yeah, so then you can apply it to multiple entries and click on OK. So if you receive 5,000, but you don't know what invoice is for, but you just apply to the open invoices in sequence from the oldest to the latest, you can do that. Or you can, if you don't want to, so if you receive a payment exactly the same amount as the invoice, then you just go to applies to doc number from here, and then find that invoice and click on OK. So after you did that, on the line, this amount will be populated. Because I didn't enter the amount, I just go to the line to find the invoice. After I select that invoice to apply, then this payment line, payment journal line, this cash receipt journal line will be populated. So this is another way for you to apply the customer payment. So after you post, let's say if you can do that when you create this customer receipt journal, it's not necessary for you to apply. If you didn't apply it, then you can go to the customer ledger entries like what I did, then to reapply that payment to the invoice. But so I can just post this payment without applying anything. I just post, I receive 100. I just put 100. One side is customer, another side is bank. If I don't apply, I just post it. It will also allow me to post it. It's just like you make a deposit for that customer. And then you go to your customer ledger entries to apply that payment deposit to whatever invoice you want to apply to. So you can apply here. This is called a pre-apply, or you can apply afterwards. That's post-apply, the payment to the invoice. This,
Okay.
yeah.
So it doesn't, so you can do it, apply the payment during the posting process, or just post it and then go back to apply that payment.
That's correct. Yeah, that's correct. Yeah.
Okay. And so then after I would typically post my journal entries, then I would go to adjust the exchange rate.
Yeah. No, you don't. You don't do the adjust exchange rate every day. You only do it at the month end. There's no point for you to do it. Yeah, that's good. Yeah.
Yeah, and so again, can you show me that?
Sure. So still in the currency screen, okay. In the currency screen, and you have this adjust exchange rate, okay. And
right. Okay.
Yeah.
Mm-hmm.
So
I remember.
Yeah, at the month end, you have to run through this process.
Yes. Okay. Perfect.
Yeah.
Perfect. Thank you.
Yeah.
Allie, this is Lori. One thing that I've learned kind of just navigating around it is you get comfortable with the old 2009, like map, where we click.
Yeah.
If you see where she's typing in the like Google search box, type that same thing, then it pulls up the menu. It's taken me some adjustment, but it's a little bit of quickly memorize what we're used to in 2009, I think.
Yes.
Yeah. This is very fast. I like the search because you can go to whenever you want, verify. You don't need to memorize the paths, like how you can get there. So.
This is Lori. One question that I have is, I think it's on the customer ledger entries, but I'm not sure how to get there for a transaction. If I want to know, if I've got an open invoice or an open line on a customer card for a period of months, and so I've been revaluing, doing the adjust currency.
Yeah.
And so I've got an unrealized gain that's accumulating,
Yeah.
Say over 6 months, and then I pay it and show where can I go to pull the cumulative impact of that?
So you have that, like you have the detailed ledger entries. So like if you go from the customer ledger entries, so right now I'm at the customer ledger entries. If you go to detailed customer ledger entries, then you remove this customer filter. So you will see anything, everything. So you will see there's like the one you will see, sorry, my colleague. Okay. So you will see, like if you have realized the gain or loss, then you will see in this detailed customer ledger entries table. And it will show up under the application. It will show up under the application. So you see under the detailed customer ledger entries, the first entry is an initial entry. Then you have an application. So when all the adjustment or there's a realized gain, unrealized gain, they will be the application. So you will see another entry. Okay, then you will see another entry for here, and you will see realized gain or loss. Let me give you an advanced filter so you can see. I remember for the last transaction we did, I do have that. Let's sort this. You see the realized gain or loss. You see this. Then you can filter by the entry type. Okay. And entry type, then you can say realized gain or loss, unrealized gain or loss. Then you can see all those revaluation or adjustment. Okay. So.
But how do you? I guess the question I have is you've got multiple invoices, and I just want to see the one invoice.
You just want to see.
So it's just by document number.
Yeah, by document number. You search by the document number. That's correct. So in the customer ledger entries, then you search by the document number. So if it's special invoice, then you search like for this one, and you check this. Then you can go to the detailed ledger entries. Then you will see if there's anything like if there any adjustment, it will say unrealized gain or loss, realized gain or loss under the entry type for that specific customer.
Right, and that's what I was trying to get to, that view. If I have one invoice and I want to see, if say it's unrealized, what's the 6 months cumulative unrealized gain? If I don't have realized, can I see an accumulative listing?
The 6
of the unrealized entry.
So you will see if you do the month end. If you do the month end every month, and let's say the payments due, if after 6 months the payments due didn't make the payment, and then you will see everything as an unrealized gain or loss if you do the month end every month. Then if you navigate to that customer ledger entry and go to the detailed ledger entries, then under the initial entry, you will see other entry type like unrealized gain or loss for each month end date, posting date. Does that answer your question? So let's say.
I think we'll just have to play around in it. Somebody showed me a way to get there directly one time, and I can't recall how to get there. So.
So this is a place you have to go. You have to go to your detailed customer ledger entries. And for each month, if you are doing the month-end revaluation, then you will see an additional entry here. Like if you, for example, you do it January 31st and February 28th, then for each month, you will see that posting date of that month. Then you will see entry type saying unrealized gain or loss. If there's any differences between your exchange rate revaluation, then you will see all those entries. Then you will see 6 months of unrealized gain or loss until that payment is made to the invoice. Then you will see the final entry for the payment with the payment posting date. It will say realized gain or loss. It's under the detailed customer ledger entries.
Okay, thank you.
Yep, no problem. So any other questions? Hi, John. So if there's no other questions, then do you want to close this meeting?
Yeah, actually, I did have one last question. I know you mentioned going in the different ledger setups and things like that. Was there anything we needed for any of the posting setups? Are there any posting groups that we need to be concerned about? I can't think of anything off the top of my head.
The posting group. So what I think is that Barb? She asked a question regarding what the purchase receipt and invoice, right? So and then I talk about that in the inventory setup. Then you have it depends on your setup in the here inventory setup. You have the in the inventory setup, you have this automatic cost posting and the expected cost posting to GL. You have this. So if you have this expected cost posting to GL and it's automatic posting every time you have any you post any transactions, the GL entries will be automatically posted to the GL. But like if you received the purchase order but you didn't invoice, it will be posted to accrual account. So at the general posting setup, it's gonna post to a inventory accrual account interim. So to record that purchase receipt, which is received not invoiced. This account will record that. And the offsite of this inventory accrual account interim is at the inventory posting setup. So in the inventory posting setup, you have, if it's for inventory item. So if it's for inventory item, the inventory posting setup, sorry, it's not inventory setup. There's so many setups. So in the inventory posting setup, you have, okay. In the inventory posting setup, you have an inventory interim account. So that this account is the offsite of that GL account in the general posting setup. For the other inventory accrual account, the other side, so you have this two account, right? So you have this inventory account interim in the inventory posting setup, and you have this inventory accrual account interim in the general posting setup. They offset each other. So after you invoice it, then it will clear out those interim accounts, post to the inventory account.
Jesse, I think the one question maybe to add on to what John was asking, I know where to go in 2009, where would we go to set up, like where, when you do that adjust cost, post cost, to direct where you want that unrealized gain, what GL account you want that unrealized gain to go to and the realized gain to go to? Where do you go?
Okay, you're asking that. I think I misunderstand you. Okay, so I mentioned that earlier. So when in the currencies table, and for each currency, foreign currency you set up, if you add it, right, then you have those unrealized gains account, realized gains account, and realized loss account. So you have all these GL account you have to set up on each card. each currency card, foreign currency card.
Okay.
Yeah, so this is where you set up the realized gain, unrealized gain, realized loss, unrealized loss GL account. And if you have an additional reporting currency setup, then you have to make sure you set up this residual gains account, residual loss account.
Yeah, perfect. I know there's like 4 different posting places, so I just wanted to make sure that we touched all of them.
Yeah.